Amid a string of good economic news, the latest job growth figures stand out. On July 8th, the day the report was released, stocks surged 1.5%. Here's perspective on what's going on. Historically, when inflation is low, investors are willing to pay $17.90 a share for a dollar of earnings on the Standard & Poor's 500 index. And the latest price-earnings ratio as of June 30th was exactly 17.9. Stocks are not overpriced, but they are also not underpriced. The valuation placed on stocks is exactly the same as the average price-earnings ratio on the S&P 500 over the past 55 years. Stocks are fairly priced. The much stronger than expected job formation figure reported on July 8th, 287,000 new jobs were created in June, followed a disappointing number announced just a month earlier. After it was announced that just 32,000 new jobs were created in May, hot money traders began to fear the long economic expansion was running out of steam. Despite months of good economic news, which has been documented here in our weekly updates, stock prices have been volatile. Great Britain's vote to leave the European Union sent U.S. stocks into a tailspin. America's blue-chip companies lost 5.3% of their value in the two-day Brexit sell-off. Since then, the S&P 500 snapped back sharply, and foreign markets have also recovered. For the last 18.5 months, stocks have been taking a breather, but that has followed an extraordinary 77% three-year revaluation run. Although stocks are fully priced, valuations could still go higher, but market sentiment is fickle and not something you can control. So we remain committed to broadly diversifying securities portfolios based on your risk tolerance for the long run. Here's the bottom line: economic fundamentals remain solid. Consumer income and spending are growing. For the rest of 2016, the rate of growth for the U.S. economy is expected to be 2.4%, which is a very respectable rate of growth. May's index of leading economic indicators suggests continued GDP growth is ahead. Forecasts for a sharp earning upturn are supported by the blockbuster job growth number for June. These are all good signs for the economy. Still, the stock market over the short term is always unpredictable. So, expect continued volatility, even amid a strong economy for the foreseeable future, and always stay focused on your long-term plan.